G'day, you absolute crypto champions. I'm Sash from CRYPTOLOGIC, coming at you live from the innovative epicenter of Melbourne, where the trams run on time, the creativity flows endlessly, and Bitcoin is proving day after day that it's an ultimate game changer in finance. You know, I didn't just stumble into this space, I jumped in with both feet because I genuinely believe in the raw transformative power of Bitcoin and cryptocurrency. It's not just about making money or bucks, it's about democratizing money, breaking down barriers that have kept the little guy out for generations, and building a world where financial sovereignty is a right, not a privilege. Think about it. From empowering unbanked communities in remote Aussie towns to revolutionizing global remittances, crypto is the spark that's igniting a fairer financial future. If that resonates with you, and I know it does for so many of you out there, give this video a thumbs up right now to show your support. Let's keep this revolution rolling. Today is October 7th, 2025, and folks, the crypto universe is absolutely electrified. Bitcoin has shattered expectations once again, blasting through to a jaw-dropping all-time high of 189,137 amid swirling US political drama and a flood of institutional cash. But that's not all. Down under, Australia's Treasury is rolling out groundbreaking draft legislation that's set to reshape how we handle digital assets, with hefty protections for investors but potential hurdles for innovators. We'll dissect all that, plus Ethereum's impressive climb, Solana's unstoppable momentum, XRP's sleeper potential, and so much more. If you're tuning in for the first time, hit that subscribe button and ring the bell. We deliver these doses of crypto wisdom to help you navigate this thrilling landscape. And hey, what's firing you up in the markets today? Share in the comments. I'll personally reply to as many as I can to build this community together. Let me share a quick personal story to set the tone. Back in 2017, when Bitcoin was hovering around $5,000, I remember skeptics calling it a fad. Fast forward now, with Bitcoin at $189,000, and it's clear, this is no bubble. It's a paradigm shift. My passion stems from seeing how blockchain can solve real-world problems like supply chain transparency in Australia's agriculture sector or secure voting systems. That's why I'm here every day, breaking it down for you. All right, enough intro, let's jump in. Before we get into the nitty-gritties, let's inject some humor to keep things lighthearted because crypto can be intense, right? Here's what's fresh from the CRYPTOLOGIC joke book. Why did Bitcoin break up with the Australian dollar? Because it was tired of all that fiat drama and needed something more stable, like a stable coin. Classic. But wait, I've got a bonus one today to double the fun. What do you call a Bitcoin miner in the outback? A didgeridoo hunting for blocks. All right. If you got a chuckle out of these, drop your own crypto puns in the comments. The funniest one gets a special shout out in the next video. Laughter's the best way to huddle through volatility. All right. Let's ground this in our backyard first, because what's happening in Australia could set the tone for crypto adoption across the Asia Pacific. Kicking off with the big news, the Australian Treasury has just dropped the Treasury Laws Amendment Bill 2025, digital asset and tokenized custody platforms. Breaking it down simply, if you're operating a platform dealing in Bitcoin, Ethereum, NFTs, stablecoins, or any tokenized assets, you'll soon need an Australian Financial Services Licence, AFSL. No ifs, no buts. And the sting? Violations could slap you with penalties exceeding $16.5 million Australian, or even jail time for serious breaches. This is straight from the government's push to clamp down after high-profile collapses like FTX, which left Aussies investors reeling. Why now? Well, according to Chain Analysis reports, global crypto thefts hit $4.95 billion Australian in the first half of 2025 alone. And Australians aren't spared last year. We lost over 221 million to scams, with average victim of $56,600,000 Australian. Think phishing schemes, rug pulls, and fake exchanges. This bill aims to bring crypto under the same umbrella as traditional finance, mandating clear custody rules, disclosure standards, and investor protections. For Melbourne's thriving tech scene, this means local exchanges like CoinSpot and SwiftX will have to level up their compliance game, potentially making Australia a safer hub for crypto newbies. But let's talk the flip side. Is this a win or a worry? On the positive, it could boost confidence, attracting more institutional players and reducing debanking issues where banks freeze accounts linked to crypto. Remember how major Aussie banks like Commonwealth Bank introduced holds on crypto transactions? This legislation promises to address that. However, critics argue it might stifle innovation, pushing startups overseas where the regs are lighter. For instance, ASX-listed companies like Locate Technologies are already eyeing international markets because our exchange feels too conservative on crypto and AI integrations. Diving deeper into regional opportunities, up in North Queensland, there's a massive potential for Bitcoin mining thanks to solar energy surpluses. We're talking 25% curtailment in areas like Townsville and Mackay. Access renewables could power ASIC miners sustainably, turning wasted energy into economic gold. Imagine Aussie miners contributing to Bitcoin's hash rate while going green. It's perfect alignment with our net zero goals. And on the adoption front, Australia's first crypto-backed mortgage was approved earlier this year, allowing Bitcoin holders to use their stacks as collateral for home buys. This is real-world utility. Shifting to broader Aussie trends, police are probing 123 million Australian dollars crypto fraud linked to bogus businesses, highlighting the need for these regs. Meanwhile, platforms like Independent Reserve are prepping for AFSL compliance, which could streamline operations. For everyday Aussies, this means safer on-ramps, but possibly higher fees as exchanges pass on the costs. What's your view? Protective shield or bureaucratic barrier? Let's hear it in the comments. Your insights shape our discussions. To expand on this, let's look at the historical context. Post 2022's crypto winter, Australia lagged in regs compared to Europe's MiCA framework. This bill draws inspiration from that, aiming for harmonised standards. For tokenized custody, it requires segregating client funds, no matter commingling like in the FTX debacle. Small businesses in Melbourne's fintech hubs might face challenges, but resources like ASIC's scamwatch.gov.au are stepping up with education campaigns. Overall, this could position Australia as a regulated powerhouse, rivaling Singapore or Hong Kong. Now, broadening our lens to the worldwide stage, where crypto is not just participating, but leading the charge in uncertain times. Bitcoin is the star today, surging to 189, 137, a fresh all-time high, up 2.7% in 24 hours and 11% weekly, pushing its market cap beyond $3.75 trillion Australian. What's fueling this? The US government shutdown is creating fiat jitters, positioning Bitcoin as digital gold, especially with gold also hitting records. Global crypto ETFs smashed records with 8.9 billion inflows last week, US leading at 7.5 billion, signaling massive institutional appetite. Ethereum's keeping pace, up 5% to $6,515, buoyed by DeFi growth and staking yields. Solana's shining with its high throughput network attracting devs, while XRP eyes $5 on ETF rumors and Ripple's banking partnerships. Bakkt stock up 150% on institutional FOMO, a clear sign Wall Street's doubling down. Around the globe, Hong Kong's China Financial Leasing raised $86.7 million for BTC ATH NFT fund, blending TradFi with crypto. Morgan Stanley's advising 4% crypto allocations in portfolios, and Trump's pro-crypto stance is adding fuel. October's historical magic. October often sees 30% plus BTC gains, could propel us to 195,000 if trends hold. But volatility lurks. Shutdown delays could stall SEC approvals, echoing 2018 deeps. Yet, rebounds are swift with liquidity pumps. Alts like VNB at $1,324 and Link at $35 are riding the wave. In Europe, MICA's rollout is stabilising markets, while Asia's adopting surges. For Aussies, this global bull means opportunity, but watch forex fluctuations with Australian dollar weakening. Let's contextualise Bitcoin's dominance at 54% shows it's the anchor, with trading volumes at 14.58 trillion in August. Institutions like BlackRock are pouring in, viewing crypto as a hedge against inflation. Emerging trends: tokenization of real-world assets, think real estate on blockchain. What's your global hot take? Time to go beyond headlines and unpack the real implications, because understanding the why and the what next is key to smart crypto navigation. Starting with the US shutdown, political deadlock delays economic data, eroding fiat trust and boosting BTC's safe haven status. With 25% YTD gains and 54% dominance, Bitcoin's scarcity 21 million cap shines against endless money printing. Short term, 5 to 10% volatility, spikes possible, but resolutions often trigger 20% plus rebounds. Locally, Australia's bill aligns with global trends like South Korea's adoption task force. It fixes debanking but demands bank-level compliance, potentially raising barriers for small players. Post-FTX, ASIC oversight ensures fund segregation, reducing risks from 4.9 billion global hacks. Tech breakthroughs: Solana's 100k TPS lures DeFi from Ethereum, while Bitcoin L2S like XSAT cut fees to pennies. Implications for markets: if BTC hits $195,000, alts could 5 to 10x on liquidity flows. Risks: regulatory overreach or hacks. Dior always: do your own research. Personal insight: as a believer, this is crypto maturing. From synonymous origins to mainstream, it's empowering billions. Bold Q4 prediction: BTC $200,000 if ETFs keep flowing. What's yours? Let's expand on economics. Bitcoin's halving cycles drive scarcity. Post 2024 halving, supply shock meets demand boom. For Oz, solar mining could add billions to GDP. Geopolitically, crypto is a hedge against US-China tensions. Knowledge is power in crypto, so let's equip you with tools to thrive. First, scam defense. In Australia, spot red flags like guaranteed returns or unsolicited offers. Use ASIC's Scamwatch. Lost 221 million Australian dollars last year? Protect with hardware wallets like Ledger. Never share private keys. Next, investment basics. Not an advice. Diversify 60% BTC ETH, 20% alts like Sol, 20% stables. Staking ETH yields 4 to 6% via Lido, but mind fees. Let's touch on blockchain, a decentralized ledger like an uneditable shared database, securing transactions via cryptography. Deeper dive. Proof of work versus proof of stake. Bitcoin's energy intensive but secure. ETH eco-friendly. Tips: use multi-sig wallets for big holds. Resources: our website, cryptologic.com.au. History lesson: Bitcoin's 2009 genesis to now, from pizza buys to $1 trillion asset. If you're a newbie, start small, learn candlesticks. Advanced, explore DeFi yields, but risk flash loans. Wrapping up, don't miss cryptologic.com.au, your go-to regs breakdown, market analyzers, and latest content. Sign up for our newsletter. Join our upcoming Melbourne events. Thanks, Cryptologic crew. Like, subscribe, share. Let's amplify this passion. Next EPs, fresh updates, believe in crypto's power, the decentralized future is here.